Kevin in Colorado, aka your Tesla pilot, and today we are talking about
Tesla.
That's right. Hey, just a quick episode today as we approach Battery Day 3 weeks from today. We have the stock split happening tomorrow. Real quick, here is Kathy Wood's protege, Tasha from ARK Investments, talking about all things Tesla.
And Tesla up nearly 40% since announcing this stock split. Let's bring in Tasha Keeney. She is an analyst at ARK Invest and covers Tesla there. Tasha, let's talk about what we have seen in the run-up to this stock split. This is taking effect on Monday. As far as we understand, it doesn't change the fundamentals of the company, but it seems like investors just can't get enough of it.
Yeah, well, I think you nailed the point there, is that it doesn't really change the fundamentals of the company or the story. I think from our perspective, a stock split now, especially with fractional shares, shouldn't have that big of an impact. But of course, you could see, some price appreciation from investors basically sort of misunderstanding it, thinking that it might be cheaper. But the long-term story with Tesla, our thesis is still intact. We think it's a leader in electric vehicles, in full autonomy, and we think it's 3 to 4 years ahead of the competition on that front. So from that perspective, our expected value for Tesla by 2024 is still 7,000.
7,000.
Yes.
I mean, it has the fundamental. That's a pretty high target when you consider where it's trading at right now. You mentioned that there's this fundamental misunderstanding of what a stock is, but we've heard a lot of investors or a lot of analysts who've come on and talked about the potential in the battery day, what could happen moving forward. I mean, is there a fundamental case for Tesla that has changed over the last month that has driven this stock even higher?
Well, I think in general this year, there's been a couple things on Tesla's side. Of course, the earnings report was received well, the possibility of S&P inclusion. But really, I think that during the coronavirus shutdowns, it's become even more clear. So if we just look at the electric vehicle opportunity, if you think of a traditional automaker who is investing in electric vehicles and basically how they're going to handle that when their core business is really sinking, I mean, that just becomes a lot more difficult. And they were already struggling with the technology. It's not their core expertise. They have to build an entirely new car. If you want to copy Tesla, that means building it from the ground up. That just becomes 10 times harder in a time like now. So I really feel like Tesla's leadership in the field is solidified. And then, of course, on the autonomous front, we still see Tesla has much more scale than any other automaker, than any startup, because it's using its customer fleet to collect data. So that's still ongoing. So, I think more so now than ever, it's sort of as an innovator, because Tesla's so far ahead, it now has that sustained lead.
There's certainly a lot of excitement riding on Battery Day later in September. What specifically are you expecting on that front?
Yeah, so my partner analyst, Sam Course, has done a lot of great work on the batteries for Tesla. So one thing that we're currently excited about is there was some teasing of basically an improvement in energy density that would make it so that batteries would allow for electric jets. So Elon Musk has talked about supersonic electric jets before, but said that the energy density wasn't there. Now he's saying that could happen in the next 3 to 4 years. What that means is that could be an incremental improvement for electric vehicles, but where it really makes the difference is for vehicles that fly. So this could enable things like electric air taxis. So actually, according to Sam's work, an electric eVTOL, vertical takeoff and landing vehicle, could actually transport you, for instance, in New York, from downtown to the airport for the price of a taxi today. So this could be, very disruptive, very quick. You could basically fly over traffic. And we think, this could be a fully autonomous operation. And I think it's, it sounds like a very far out there idea, but the fact is we're actually approaching that point today because of these chemistry improvements. Batteries are sort of this innovative platform. One of the reasons we're so concentrated on them at ARK is because they enable disruption across a lot of fields. Electric vehicles is a huge opportunity, but it also enables things like drones. So this could be, in this case, the larger form factor drone that transports people or cargo. But you could also have drones that, of course, transport smaller packages. So again, this seems like a far out there reality, but it's here, it's now, and the technology is ready. So the expected value includes our assumptions for the core EV business, but also Tesla's position in enabling a fully autonomous taxi network. And actually, one thing in our research that has changed over the past year, so Tesla's talked about launching this Uber-like autonomous service. On the last earnings call, Elon Musk said that he's basically at this point where he can drive from his house to work with almost no interventions. He thinks they're very close to solving for full autonomy. With our most recent research, so let's say Tesla launches a ride-hailing network with human drivers. They basically have to do this to learn the ins and outs of ride-hailing anyway, and to seed the autonomous network, sort of create the bones of it. But this is also an interesting business opportunity for them because Tesla's costs on a per mile basis to drive a Tesla, it's actually cheaper than the average vehicle on the road or than the average ride-hailing vehicle. So what that means is Tesla could take a higher cut than Uber and Lyft off of revenues. It could actually pay its drivers more. It could offer, vertically integrated insurance offerings because it's much more vertically integrated than the ride-hailing networks. And it could be a really interesting time to launch that right now with the coronavirus epidemic because basically, there are these gig workers that are looking for work. There are customers that don't want to take public transportation. And Uber and Lyft are really hurting. So I think this could be a big opportunity for Tesla, and it actually sort of de-risks that autonomous thesis. Because if you think autonomous technology is crazy and it's never going to happen, well, okay, they can launch this ride-hailing network, and that actually gives them this software as a service like margin business model, this recurring revenue, without solving for that big technological leap. And if you do believe in autonomy, it also gives them the data to then feed that autonomous network and make it better.
Tasha, it's fascinating to look at all the parts that way. Let me ask you really quickly, though, about what you see in the Chinese EV market. We had XPeng, which is seen as a competitor to Tesla, come to market this week. We've also seen a huge run-up in the stock for NIO, also a competitor, although that stock is down more than 6% today. Is that the case for growth in China still intact? And in fact, are we seeing it gain momentum now?
Yeah, so the Chinese market it's the most important auto market, and for electric vehicles, our forecast is 37 million EVs sold in 2024. China should be roughly a third of that, and actually for autonomous taxis, we think the market value should be worth in the trillions at that point, around 4 to 5 trillion. And again, China could be a third of that. So it's it's basically the most important market in both cases. In the electric vehicle market specifically, competition's very high. There's over 150 electric vehicle manufacturers in China. And it's a very unique market where the government has a lot of say in who wins. So that said, looking at startups like this, we don't think that a company like Tesla is going to be the only player certainly in the Chinese electric vehicle market, but also in the global electric vehicle market. I think it's really important to sort of see and watch how these companies get to scale. One important thing to look at for both of them is how much they're insourcing versus outsourcing. Again, because that vertical integration has been a really key advantage of Tesla's. It's very important when you're building a software platform on top of the car, and it's also very important for an autonomous network as well. But you also get the full advantage of your battery system, again, if you're sort of vertically integrated. So I think, that both of those players are outsourcing some parts. So I think sort of watching that story and just seeing what the end product will be, how much will they insource versus outsource, is an important thing to look at.
Tasha Keeney with ARK Invest. Always good to talk to you.
Great to see you, Kiko.